Hello, everybody. Welcome to the latest installment of Board Basics Rock Finances. You are hopefully a board member, or committee member, or member of a New York resident-owned community. I am Molly, here to walk you through yet another just unmasking of these financials, and hopefully in a way that demystifies them a bit, helps you ask the right questions of your property manager, and engage other professionals in assisting you in upholding your fiduciary duty. So today we're going to be talking financial statements, and I'll break this up into manageable chunks. So the first thing we're going to get to, we're talking about four in total. But the first one we're going to dig into is your balance sheet. So I should note before we get too far into this that depending on the software your property manager uses, your balance sheet, your budget to actuals, they're going to look a bit different. These sample financials that are made up are for a community called the Happy-Go-Lucky Co-op Incorporated, and they are designed in QuickBooks, I believe. So if your property manager uses QuickBooks, this is going to look really familiar. If they don't, that's okay. You can still find all this basic information. And again, as always, I'm happy to dig into your financials, your Rocks financials with you side by side. Even if you're looking at these and you're saying, well, what is this? This isn't what my financials look like. We can look at yours together. But as a general overview, we're going to look at some examples of some balance sheets. So a balance sheet is, in its most basic sense, just an overview of your assets and your liabilities. So your co-op's assets and liabilities. So when I ask you, and again, good to reference the 6 things video from earlier, but some of those 6 things are all your different account balances, right? Those are going to be on your balance sheet. And you can see right here, this co-op has a checking account, debt service reserve, replacement reserve, and a tax escrow account. So those are their total in checkings and savings. And that is going to be a number, one of those 6 things that you want to find. Also worth noting, that's why I put that little light blue arrow there towards where it says accrual basis. You all do accrual-based accounting. It's required by your lender that you use accrual-based accounting. And all this means is that you book things when you accrue those expenses or when you accrue that income, not exactly when you have the cash in hand in the case of income, or when you've paid it out to your vendor. So for example, I would book all my lot rent on the first of every month when it is due to me, the full amount, because I've earned that, right? I have accrued that income. And then the flip side of the same token is I book expenses I incur rather. I book that at the moment at which it is incurred. So if I owe, an engineer $5,000 for scoping the water lines, I'm going to book that in my accounting software the day I'm billed for that, not necessarily the day that I pay out for it. So you all use accrual-based accounting. It's required by your lender. Happy to dig more into accrual versus cash basis. It's a little bit weird at first because it's not how most of us do our personal finances, so I just wanted to call that out. And that's also why that accounts receivable number there is so important, right? It's telling you, yep, you accrued all of your lot rent, right? In accrual-based accounting, you have booked all of the lot rent for that month, but accounts receivable says, hey, you didn't actually bring in this amount. So yeah, you might have booked it on your income sheet, but you didn't actually bring this in. So that's accounts receivable. And just a continuation of this balance sheet, you can see, and everyone's is going to look a bit different. This co-op looks like they have a couple notes receivable. Maybe that's, small loans they made. Park-owned homes, perhaps, owned by residents that they're paying notes back on. Prepaid taxes and insurance. Equipment held for resale. The land is obviously a big asset. land improvements, so any work you've done on that. Looks like they have some type of vehicle right there, and then they depreciate furniture, fixtures, and equipment there. And again, that's accounting jargon, sort of, but you can get into that a bit more with your property manager. And then your liabilities. So these are any amount you owe your lenders. So it looks like they've got a loan from CDI there, and obviously that big note payable, Rock USA Capital is their main mortgage, it looks like. Any accounts payable, so again, that's money that you owe that you haven't paid out yet. To vendors usually, and then you've got your equity as well. So membership fees, retained earnings, and your net income. That's all your equity. So that is going to take you all the way through your balance sheet. We are going to come back in a little bit and talk income statements, budget to actuals. But thanks so much for taking a look at this balance sheet with me. I appreciate your time and have a great day.